Welcome to the follow the money strategy. We'll be going over the first aspect of this strategy, which is market structure, and I'll be explaining how market structure works and what you need to be looking out for. So you normally start off on the higher time frames. So what I would suggest you do is on your trading view, favor all of these time frames so you have the higher and the lower time frames available for you to switch through very quickly like this. So you start off on the weekly time frame, and as you see, I have marked up already the high and the low, and if we zoom out, we can see that the market has been on a downward trend for quite some time. So if we are taking trades off of the higher time frame market structure, we'd ideally want to go along with the trend as opposed to going against the trend. It's much safer. So we'd be looking ideally just for sells on this. So what you want to mark up is your, on the weekly time frame, on the higher time frame, you mark up your real structure points, which is your actual high and then your low, most recent high, most recent low. And if we zoom out of here, we can see that this is the high, most recent high, this is the most recent low, and then the market has it did go bullish for a while, for quite some time, but it was still within the overall market structure, which was bearish. It's a downward market. Now if you see on the weekly time frame, we are bearish, but if we go down to the daily time frame, we suddenly see that we're actually bullish. Now what's going on here is that the market is making its way up to some particular type of structure point, which we'll go over in one of the future videos. But as you can see, when you look at market structure, you look at your high, then your low, then your lower high, you have a lower low, lower high, lower low, and so within this high and this low, within this swing, anytime the market goes bullish and doesn't break the actual structure point at the top or the actual structure point at the bottom, you still say, okay, the market is temporarily bullish, but overall within the actual structure it is a bearish market. And so if we come to the most recent swing, what we see is the market took out some liquidity, which we'll go over in a future video. So it broke the high, it broke the previous actual structure, real structure point high, but then it came and went bearish and broke the low. So now we know that this market structure is actually bearish, because even though it took out a high, it came and became very bearish, and our momentum, our strong move was a bearish move. Whereas momentum on the bullish side of the market, when it broke that high, it kind of had a very difficult time and it meandered for quite some time. But once it went bearish, you can see it broke structure at this point over here, and then when it really started moving, it just, it didn't waste any time at all. So on this is your weekly. I've marked up here the weekly high and the weekly low. These are the actual structure points. And on the daily time frame, you can see that the market went bullish, started to give you a high, a low, higher high, higher low, higher high, higher low over there somewhere, higher high. But what we were looking for is, even if for this was bullish for 165 days, which is a relatively long time. So I mean, even if we were buyers in this market, we're still waiting for this weekly actual structure point to be taken out before we can have confidence that this has now become a bullish market in terms of the market structure. As you can see, as the price approached there, it did not take out the high, and it reacted, and it reacted off some point of interest, which again we will go over in a later video, and it went bearish. It reacted really quickly. So on the daily time frame, it became bullish, but then it was making its way up to a point of interest off of the weekly. Now when this market was moving up, let's go to the 4-hour time frame. Now on the 4-hour time frame, you can say confidently that for quite some time it's been a bullish market. GBP USD has been bullish for quite some time, but really what was going on is, yes, it was bullish, but it was making its way up to a particular point of interest on a higher time frame. Once it did, it reacted, and it's now become a bearish market. And what we can see here is structure points being taken out to confirm the bearishness. This is within the actual weekly structure. It makes its way up quite high up to almost, you know, close to the top, and then it reacts really quickly, and then this is your previous higher low. That's your higher high, higher low, higher high, and now it makes suddenly lower lows, which means we're looking for a lower high, then a lower low, and the market's going to carry on going bearish probably for quite some time. We're looking for a retracement up to some type of structure points. There's multiple structure points here, which we'll go over in future videos. But as you can see, the higher time frame was very, very bearish, but then the lower time frame, like the 4-hour, became bullish, and it reacted off of a point of interest and became bearish again. And so what you want to do ideally when you're trading is to trade off of the higher time frames, because that's how you'll get your 1 to 10, you'll easily get your 1 to 10s, 1 to 20s, and that's how you get your 1 to 100, 1 to 200, 1 to 150 type trades. Where if you get a trade up here somewhere and the market just carries on going, which is ideal, which is what you're looking for, you're looking at a huge risk to reward return at that point there, when you're in line with the higher time frame market structure. So what you want to do is off of the higher time frames, you have your structure points. When the market starts to, even though on the higher time frame, like I said, this is a bearish market, but when it starts to move up and starts to become bullish, what you want to consider is this is actually internal range, and so the external range would be beyond this actual high and beyond this actual low, lower than this low and higher than that high would be in context to the weekly swing. That would be the external range, and anything inside of this, any movement inside of this, is the internal range. So this, every time the market moves up and it takes out some type of liquidity, again, which we'll go over in future videos, it takes out internal range liquidity. It never actually took out any external range on this swing, and it carried on down. So we can be quite confident. We don't even need to really wait for any extra confirmations on this. But in terms of we go back, so if we were looking at this swing, I'll just mark this up. If we were looking at this swing from here to here, what happened is the market came and it moved beyond. So if we were looking at this swing, from there to there. So any movement up here would have been internal range liquidity, but as you can see, the market moved higher. Now the market moved higher, which kind of made us think, okay, has the market gone bullish now? Then it came on the other side and it moved lower again, so it went bearish. Now in the overall structure, as we can see, we zoom out, the market is very heavily bearish, meaning this was actually just a liquidity run. Again, something that we'll go over in future videos, but this can be very confusing for traders because they'll see a move higher, they'll start to become buyers, and as you can see, suddenly the market goes lower. So as you know, institutional traders or smart money traders, we need to consider these internal and external range liquidity points, and ideally we wouldn't have even been in this market. We would have waited, we would have been waiting for price to move back up to some type of structure point. This swing would have become our new range, and it would have become our new actual structure point, and we would have been waiting for the market to come up and mitigate, which is something we'll go over in a future video as well. It will mitigate some type of it will mitigate the orders much higher up, and then it will continue to move down. So in this market, we're actually looking for now, when you're looking at a market structure, what you need to look for is, what are we expecting next? Are we expecting a high, or are we expecting a low to be made? Are we expecting external range liquidity, which would be beyond this or beyond this? Are we expecting the market to go higher or lower? So in this context, what we're looking at right now, because the market is heavily bearish, it took some liquidity at the top there, it moved very quickly and took liquidity at the bottom there. We're actually looking for now a lower low to be made. So if we can get in somewhere here, you're looking at a huge range even from here of like 1300, 1400 pips move, which might take, I mean, you know, it might take a couple of weeks, might take a month, 2 months to happen, but we're expecting a lower low to come next. And when we have that in mind, what we can do is we can start going through the time frames, looking for points of structure, looking for where the price might react, and looking for entries, which entries we'll go over later, but let's just look at structure. So what you want to do is, we've gone over from the higher time frames and we're coming down to the lower time frames, and if we go all the way down to the 1 minute time frame, actually, just to explain this in a different way, if you have a look at these yellow lines, these represent a higher time frame, but let's just say a daily, and these blue lines could represent the 4 hour. So as you can see on the daily time frame, price is bullish. It gives, that's your low, that's your high, higher low in context to that one, higher high in context to that one, and then when you start tracking price starts coming down. On the 4 hour, it breaks structure, it broke structure there. This structure point got broken, so on the 4 hour we've gone bearish, but this daily structure needs to be taken out before we can say we are bearish on the daily. At the moment, when we're over here, price is only bearish on the 4 hour time frame. So when price comes, breaks this structure, gets down here, we can say that on the 4 hour we're bearish, but on the daily we're still bullish, because the last structure on the daily was the higher high. So unless it gives us a lower low, we're not bearish yet. So as you can see, price comes down on the 4 hour, it keeps coming down until it makes its way towards maybe some point of structure, a point of interest, a decision point at the bottom here. But what happens is, as you can see, it doesn't take out the low, it doesn't take out the daily low. and then price rallies, and then the likelihood is price will continue and it will make a higher high. And so this is what you would do on the higher time frames, and then you will come down to lower time frames and you would find a point of interest. Once you find your point of interest, you will start to pay attention to structure, and you will try to figure out you will wait, you will set some type of an alert up here, and you will wait until lower time frame structure breaks and structure becomes bearish. That's when you start looking for your entries. So now on the 1 minute time frame, as you can see, price just keeps moving up, keeps moving up, keeps moving up, and it makes its way to a point of structure. Makes its way to a point of interest at the top there, and then once it starts breaking structure, as you can see here, so that was your real actual point of structure on the 1 minute time frame. Price reacted off of something there, it broke structure here quite clearly, made its way back up, carried on moving down, made its way back up, and then it was just gone, and it's continued to be bearish ever since. And you can see the same thing on, say, you can go slightly higher. You want to analyze different time frames. So if you're looking at the 5 minute time frame, that's your structure point. That's your structure point that we marked up on the 1 minute time frame. You see it wick below. When you see it wick below, you start going down, wondering, okay, did it clearly break structure? Did it close underneath that high, that low, sorry? And it did. Price clearly closed underneath the low. Now we can expect to see bearish prices. Thank you for listening.